Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. In this live stream recap video, I want to go over UNG. That's right, we absolutely sniped this name during the CFO Swing and Watch member exclusive live stream today. Now, before I go into how we sniped the bottom on this name today for a swing trade, I just want to give you guys a short appreciation because for the past 2 weeks, I've been very, very sick. And a lot of you guys came out to just, send me a comment, wishing that I get better. And thanks to your comments and your warmth that you've given me, I am getting a lot better. And hopefully, by this end of this week, at least I'll be completely healed. I do have some symptoms left, so I apologize if I do cough here and there, but hopefully that doesn't hinder what I'm trying to get through to you guys with this specific UNG trade recap. So with that being said, I truly thank you guys for all the continued support, the likes, the comments. I know that you guys are enjoying this recap and all these recap videos that I've made for you all. So make sure you guys continue to watch and learn. Okay, so with UNG, the first thing that I looked at was XLE. That's right. So I was looking at the energy sector last week. And the reason why I was looking at this one is that, well, before I even get into XLE, I was looking at Oxy. So Oxy was kind of the number one reason why I was feeling a bit bearish about energy, specifically oil names. And why oil names? And why specifically this one? Because we were looking to long this one. And the reason for that is that, well, we were looking to bet that the price will stay on top of the daily 50 SMA. And why does this matter? Because the daily 50 SMA is a very hard level of support that the price tends to use as support. And Oxy has come back down, OXY has come back down to retest the daily 50 SMA. However, since I don't always want to have a single bias to one side, I made sure my CFO Swing Watch members know that the price is looking a bit bearish here. Why? Well, the price has come back down to retest the 50 SMA a couple of times within the last couple of weeks in November and just in the month of November as well. And usually when a price tends to retest the specific level, or in this case, an SMA, especially the 50 SMA, that tends to tell you that the buyers aren't strong enough, because if the buyers were strong enough to bid the price higher, we wouldn't be able to see multiple retests of the daily 50 SMA just within a couple of weeks. So this sent off a warning sign in my head saying that, okay, well, there's a chance that the sellers can really just push out the buyers here, especially if we continue to stick around the daily 50 SMA, because that will just give more confidence to the sellers that buyers aren't strong enough to uphold the price above the 50 SMA and move the price away from the 50 SMA. So we actually got out. I said, okay, you know what? I'm not going to increase our risks further after assessing this type of risk using our technical charts. And I just didn't have faith that we would be able to push out of this descending level of resistance. So this trend line I also drew for my CFO Swing Watch members, and I explained to them that there is a high probability of us not breaking out of this descending level of resistance, and it's a better idea to just get out for a smaller loss than to hope and wait and extend our losses further. So obviously we had a stop loss in mind, which is why I got out on my stop loss. But with this trend line here, this kind of gave me the final say to my risk assessment for my long here. And the fact that we had such a negative slope on this trend line just told me that there is a possibility that we can see sellers coming back into this name heavily if we reject this descending level of resistance a third time. And you may be wondering, where's the third time? Well, right here, right? We have 1, and then 2, and then 3. So obviously now in hindsight, it worked out. My warning sign worked out to the favor of the bears here, right? The sellers. And so once I saw Oxy here, okay, right here in this week, I said, okay, let me take a look at XLE then, because XLE should be showing similar chart pattern. And yes, it was. And XLE was basically losing the composure for bulls. And how do I know this? Well, first of all, my first warning sign was that the 10 and the 21 SMA, okay, they're very, very coiled together, right? They're getting very close to each other. And whenever I want to see continuous momentum to the upside, I want to be able to see the 10 and 21 SMAs kind of moving further away from each other, right? The distance between the two SMAs has to move further away. And for the fact that we did not see this happening, okay, gave me that first warning sign. Excuse me, guys. Now, the second warning sign was that the price was constantly losing the 10 and 21 SMA support. Now, if you guys don't know, or if you guys haven't seen my previous videos, it doesn't matter if it's a live stream recap videos, but if you guys haven't seen any of my videos, my 10 and 21 SMA is called my momentum pair, and it works for both to the upside and to the downside. So if the price, if I want the price to stay in the uptrend, I want the price to stay above the 10 and 21 SMAs. Those are my SMAs of support. And on the other hand, for a downtrend, where the price is moving to the downside, I want the 10 and 21 SMAs to be a ceiling, a level of resistance where the price can get passed through and up above. So it's a very, very simple way of looking at things using the 10 and 21 SMAs, which is the reason why I use them. And so in this case, we kept on losing the support that we should normally get if we have a good enough momentum and enough buyers coming in, when we just kept on losing the 10 and 21 SMAs multiple times. So in this case right here, we kept on losing the 10 SMA, and we closed below it and opened below it multiple times. And in this case here, now this is the most important part, and the reason why I said, okay, you know what, we need to get out of OXY, and energy can see a shift to the downside, right? So this day right here, this was kind of the final card for me, because we made a lower low compared to the previous low, which was right over here. And that told me that, okay, no matter how many tries the bulls are going to make the price go back above the 10 and 21 SMAs, my momentum pair SMAs, sellers are gaining ground. And we got our answer this week as we rejected off of the 21 SMA. And even last week, we kept on staying underneath the 21 SMA and eventually the 10 SMA after retrying to get above both the 10 and 21 when this 10 SMA converged on the 21 SMA here. So this just gave me a lot of confidence that the overall energy sector was looking to consolidate and pull back a bit here as we've came back to retest the previous all-time high level of 91.28, and eventually we broke above that 91.28 and we made a new all-time high of 94.71. So this is how I basically told my CFS Spring Watch members to get out earlier instead of waiting and hoping for a potential reversal in OXY. Now, with that tangent being said, how does this all relate to UNG? Because we're talking about natural gas. Well, natural gas is also a commodity that's frequently looked at with oil, right, or crude oil. So based on what I said, it will make sense that UNG was also seeing a rapid decline in its share price, right, for the past week and this week as well, especially this week. And so today, I was looking at this name and we were red, right? Except we didn't break below the previous low of the day. And if you take a look at XLE, we did on XLE, right? We actually broke below the previous low of the day, right? Which was 84.73. And today's low of the day was, oh, excuse me. Yes, actually, I got confused by the candlesticks here. Today's low of the day was 84.37. So even if they're a few cents apart, this signifies that the bears are still strong. The sellers are still here. And I was surprised to see that UNG was actually holding up very, very well. And I did not expect to see a gap open at UNG as well, because even though I saw UNG later in the day, I was able to see the opening price, which was 17.12. And that was a gap open compared to the previous day's close of 16.39. So we have a higher low compared to the previous low of the day, the PLOD, which was 16.30, and today's low of the day was 16.47, and we had a gap up in the morning, right? We had a higher open compared to the previous day's closing price. And I opened up my RSI because, okay, why not? Let's look at the RSI and see where this is at, because I would assume that this would be a little bit oversold at this point, because first of all, we've been seeing a huge decline in UNG since the previous high point of 34.50, right? And so at this point, I was like, okay, I had to check the RSI to see if the price is now, oversold once more, because our previous low point was 17.41, and I precisely remember that this name was oversold when we were down here. But now that we've gone below 17.41, the previous low point, the pivot low point of 17.41, I had to see whether or not the RSI was lower compared to this previous low. And guess what I saw? I saw a divergence. And what was this divergence? Well, UNG's RSI on a daily time frame was telling me that, look, we have made, or we're potentially making, a higher low compared to the previous low here, right? And this is telling you something here, this bullish RSI divergence. And for the fact that we made a lower low on the price, and the fact that we made a higher low compared to the RSI, tells me that sellers were kind of losing composure here. And thankfully, okay, I was looking at this name when we're near the low of the day and we were making a new low of the day. And as we're making that new low of the day, I switched quickly to the 15-minute time frame. And I was watching this name around right here. And as we continue to make a new low today, I was like, okay, you know what? It seems like this name is going to continue to move lower, and eventually it will have to fill in the gap that it made in the morning. And you can clearly tell that there was a gap up on the 15-minute time frame. And so I focus on the fact that we have a bullish divergence on the daily time frame, and we're looking at a potential pivot point here on this low point of 16.30 compared to the daily low pivot point that we had, the previous low pivot point on the daily time frame of 17.41. So if we go back to the 15-minute time frame, I decided to get in around 16.50. All right. And why did I get in here? Because, well, 16.50, first of all, is a whole number level, right? 0.50 and 0.00 is considered a whole number level in the stock market. And so I bet on the fact that, okay, well, we can potentially hold 16.50. And also, we kind of used it as a level of support yesterday, right, on the intraday levels here. So it wouldn't be too wrong of me to think that buyers are still left at this whole number level, because it's a whole number level and it's also a support that was used by buyers yesterday. They can't just disappear again. Well, not again, but they can't just disappear into thin air the next day, right? So that's basically what I was betting on. And so I decided to let my CFO Swing Watch members know that, well, I am in these contracts. UNG high risk swing, 18 calls that expire on December 30th. And I'm looking for a short-term bounce on NG, natural gas, and we can also look at BOIL. Okay, and BOIL is the leveraged ETF for natural gas. And I also sent in BOIL 40 calls December 30th can work as well. Okay, now the reason why I called it a high risk swing at 8:57 a.m. is that, well, I was already in earlier and I was sending the message slightly late, a few minutes late here. And I believe I sent that message around 16.60ish, I believe, 16.62, 61. Okay, so somewhere around 0.60 to 0.62. And it would have been a quote unquote late entry. Even though there was also a possibility of my entry being taken out, and as we could have headed lower and fill in the gap completely until we reached the high of this candlestick, which was 16.41. Now, I personally would have added there if we did do that, but we didn't do that. So we sniped the entry point here. It was a perfect entry because as this candlestick ended before 9 o'clock, candlesticks opened, okay, we got a nice pump up higher. And after this 15-minute candlestick was finished, we saw a huge amount of volume coming in, a lot of buying coming in, a lot of bidding coming in from buyers. And we continued to push up higher and higher and higher. And at one point, I told myself there has to be some news, but I was too busy looking at other positions that we have from the CFO Discord and CFO Stream Watch, and I didn't really want to focus on what the news was and just play on the price action. Now, why am I telling you this? Well, because first of all, before I even looked at UNG, okay, I told my CFO Stream Watch members around 8:26 a.m. that, well, I'm waiting for energy plays right now, right? I'm waiting and looking for energy plays. And, for some reason, I had this weird gut feeling that I have to be looking at energy names today because if you guys forgot, the energy sector can become a defensive sector. And for this entirety of this year, you already know that energy has been going straight up, completely inverse to the market. And since I already knew from XLE and Oxy, right, and other oil names that we've already gone a considerable amount for the last week and this week, there has to be some sort of an intermittent bounce, right, before we start heading lower again. And so I checked CL, right, crude oil futures, and it looked like crude oil was coming back down to retest a critical level of support at $73. All right, so let me make it bolder here for you and make it green. So this $73 was also a huge level of resistance in the past and also another huge level of support in the past. And in this case, with the price coming back down to 73, we're about to use this level as support. So I start to build my case here for being a little bit more bullish on energy for the next couple of days for an intermittent bounce after having such a horrible past week and the first few trading days of this week. So that's the reason why I got into UNG, right? And eventually it led me to grab those contracts perfectly well off of the lows. And we were able to see that right here, as this message indicates, right at 8:59, right, UNG, the intraday bounce right after we got in, right? So it almost seemed like it was magic because right after we got in, we were able to see that huge bounce coming in, and it just seemed like I was playing with information that I didn't even know that I had, because in the morning we got this news, right? And so this is a article published by CNBC at 5:49 a.m. Eastern Standard Time. So since I'm in the Pacific Standard Time, this was posted 3 o'clock or 2 o'clock actually. So it was about to turn 3 o'clock, but this says right here, US pledges to ramp up supplies of natural gas to Britain as Biden and Sunak seek to cut off Russia. And my apologies to any British people here if I said the new prime minister's name wrong. My apologies. But so this was essentially what allowed UNG to have a nice gap up, right? Because UNG literally spells out United States Natural Gas Fund, right? And so it seemed like I enacted on this news that it looked like I've known about it, but I only figured this out after market hours. So this is completely lucky for me as well, for the fact that I was looking at a name that had such bullish news. But overall, I still credit my TA and my experience as a swing trader here to be able to snipe such a great entry for myself and for my CFO Swing Watch members as well. Excuse me, guys. So, I think it was an absolutely amazing entry so far. And just to let you guys know, we are still in this name since we just got it. Remember, I initially told my CFO Swing Watch members that this is going to be a high risk swing. And so those current contracts right now, as you guys can see in the thumbnail as well, there are at over 41% in return since entry. And I got a little bit heavy on the $18 call strikes. And also for the fact that we already are almost at the money and almost in the money if we do continue to go up higher. And once we start filling in this gap here that we made between Friday and Monday, we should be seeing some very, very good returns, possibly over triple digits. Okay, so UNG over 41%, and Boyle, the contracts that we were looking at, I personally didn't get it, but hopefully my CFO Swing Watch members got it. They should be over 70% or at least 75% max. So hopefully you guys are able to play it as well tomorrow with the same contracts, or if you guys want further out contracts, I would recommend to try to stay as at the money as possible, because you never know what could happen if the price decides to get into this gap and starts filling the gap. Because remember, this gap down was caused by sellers, and sellers will be dominant in this gap down, and buyers will be having a time of their life trying to fight against the heavy sellers at the top here. Okay, this heavy area of supply in this gap down. So make sure you guys are being careful and be wise choosing your strikes, and especially your expiration date. And that's the reason why we got December 30th, to make sure we have enough time to make sure that the contracts that we're using, the 18 call strike contracts, have enough time to become in the money. All right, that is it for this video. It may have seemed a bit stretched, but I want to give you guys an overall insight on how I was able to identify this play, and also kind of the the luck that also comes with trading. Because remember, you can know everything about the market, and you can have all the technical skills, the fundamental skills, with TA and FA, technical analysis and fundamental analysis, but you will always need a little bit of luck on your side. For example, like UNG, where I did not know there was an article that was published before the market was open. All right. So, luck does play a part, but you always need to be prepared. Just like today, where I quickly got prepared for an entry, and I made my game plan and I executed. All right. So if you guys want to, get more trades like this, and continue to learn from me, make sure you guys check out the description box below, and you'll see the first link, which is the subscription link for the CFO Swing Watch newsletter. And just to remind you guys, if you guys want access to the private CFO Discord, you have to become a newsletter member. Okay, so thank you guys so much for watching. Thank you guys for putting up with my voice. It may have sounded a little bit weird here and there, but that is just me trying to hold in my cough. And thankfully, I wasn't able to cough a lot in this video. And I thank you guys so much for, again, the kind comments that you've been sending me the past 2 weeks. All right. And hopefully you guys are also in great health as well. I'll see you guys all in another video, and thank you so much for watching.